Most investors never build real wealth. And it's not because they pick the wrong stocks. In fact, the real reason has absolutely nothing to do with the market at all. Working in private wealth management with client portfolios and speaking with different portfolio managers, this is something I've seen happen over and over again. The reason why they don't invest well isn't because of a lack of information. In fact, this generation has access to more information, research, data, and analysis than any other generation in the history of mankind. The real problem is actually structure. You see, most people approach investing without a real plan. They jump between different ideas at different times. One week, it's a stock that their friend recommended. The week after that, it's an ETF that they saw in some blog. And the week after that, it's some analyst call that they read about on the internet. The problem is none of it actually fits together. You see, a collection of good ideas isn't a portfolio. It's just noise at the end of the day. And noise that compounds over time is one of the biggest problems an investor can actually own. Portfolios that actually build wealth aren't built randomly. They're built with structure. You've got to know what you're buying. There's a clear idea or agenda behind each and every single position. Why you're buying it, why it's in your portfolio. Is it a growth stock? Is it for stability? Or is it just for liquidity? Okay, but everything must work together and meet your objective goals. If not, once again, you'll just have noise in your portfolio. I've seen people with genuinely good investments still struggle to build wealth because they were not put well together. They had no clear framework or structure behind their choices. What really stands out when you look at successful investors is this. They're not trying to be right every single time. They just try their best to avoid making bad decisions that could completely destroy their portfolio. And that's it. That's the edge. And this is the part that most people actually miss. They think that in order for you to build wealth, you've got to be in the next big opportunity, the next big IPO, or the next big analyst call, when in fact, it's all about having an approach that you can stick to through different market conditions and environments. Consistency is what sets good investors apart from bad investors. If you wanted to simplify it into a framework, it really boils down to just three things. Number one, have a clear structure. Okay, know what you're holding in your portfolio, how your portfolio is actually split between growth assets, stability assets, and just liquidity, and know the reason why you hold each position. If you can't describe your asset allocation in one sentence, this would be the first thing that I would look at. Number two, stay consistent. Avoid selling or repositioning because of changes in sentiment or in a sector. The ability to hold a position or portfolio through a storm or through a drawdown is one of the most underrated skills an investor can have. And number three, avoid emotional decisions. You see, most mistakes don't come from the market itself. They come from how people react to it. The investor who perpetually repositions their portfolio and makes decisions that are not based on the fundamentals that brought that portfolio into existence is the one who perpetually buys high and sells low. If you're investing and you don't have a clear plan, this would be the first thing that I would look at. Before worrying about how to select stocks or investments themselves, know that your approach actually makes sense as a whole and it meets your investment goals that you set out before you started investing. Because the market will be volatile. It's not a matter of if, but rather when. And the real test is if you've got a structure that you can stick to and survive the volatility when it does occur. The real difference between investors who actually build real wealth and those that don't isn't knowledge. It's having a system that you can stick to through thick and thin. If you want more videos that break this down in a practical, no-nonsense way, subscribe. Every week, we publish institutional level thinking on portfolio construction and valuations and wealth strategy that you normally don't get because they're behind closed doors. I'm Vim, and this is Vim on Bay Street. See you next episode.